Today I'm going to show you my opening range breakout or orb strategy that I use when day trading. Let me say two quick things. I am an AI channel and day trading ties in with Quant Crawler. I've been doing day trading here and there for the last few years, but I've really gotten serious about it the last 4 weeks. In these last 4 weeks, I've been able to make over $15,000 day trading on funded accounts, and I've used my Quant Crawler GPT that I built within ChatGPT to take two $50,000 funded accounts to live accounts and out of evaluation in that time, while also operating some accounts that have already converted, plus my own personal account, trading 5 accounts a day and making money. So I'm just trying to show you this works if you have structure and strategy that you can implement, as well as two of the most important things: patience and not being greedy. Every morning that I trade, I only trade one strategy only, and it's always ES futures. And it's the only thing I trade: ES in the morning. And then when the Asia session opens, which for me, that's around 3 p.m. Pacific Standard Time, I trade gold futures, the GC contract, and sometimes the MGC if there's just a lot of volatility and I'm looking for a lottery play. Now, I'm in replay mode from last week. For this is actually Friday. So let me show you what I do. So the New York session open starts at 9:30 in the morning on the East Coast, which is 6:30 for me Pacific Standard Time. So I wait until 9:35 and I mark out with a rectangle drawing this 5 minute candle. I'm only looking at the 5 minute chart. I try not to look at the 1 minute chart because it stresses me out. All the ping ponging, I just don't like it. And it's only 6:30 in the morning and I'm having coffee. I don't need my anxiety going up that early. So I take my rectangle tool here and I mark out from top to bottom the full wick, by the way, not just the candle, wick to wick. I mark out that whole entire thing right there. Now, these are the indicators that I have running. I have VWAP, support and resistance levels. That's the blue. And then there's a red way up here. And then I have fair value gaps. So a lot of people, when they trade the opening range breakout, they're just waiting for a candle closure outside of this range. I'm looking for that, but I'm also looking for like zone right here, which is a fair value gap. If I remove this fair value gap indicator, you can see that it's no longer marking those areas. So I'm not only looking for a breakout, I'm looking for a fair value gap to present itself. That way I know that there's a zone where there's some liquidity hanging out. So let's go ahead and start this chart and I'll show you where I entered and where most other people who do this would have entered and they would have lost. So right there, fair value gap, straight down, boom. It's a very next candle is that break. And I've been burned so many times by immediately going in right here. Is what I would have done in the past is I would have done this right here. In this 5 minutes, I would have seen boom, broke, fair value gap, the very next candle, and I would have put my short right here, and I would have set my stop loss just above the middle point, and I would have targeted a 1 to 2 reward on this. So 1150, I would have set this at 23, which would have been right here, and I would have waited. But I've been burned immediately off these first candles. I never take it. And I've also probably could have gained some money by not being so hesitant, but this is the exact reason why. Watch this. It's going, it's just kind of treading right there. We start going up and boom, right there, we would have ticked out. We would have lost $500 because I trade with a $500 risk, $1,000 gains. So this big, I'm not going to say false candle because that's a very real candle, would have suggested with a fair value gap a breakout. But because if it's in this first three, I just don't touch it. I leave it alone. I'm now going to see, are we going to break back out above with a fair value gap, or are we going to break below with a fair value gap? And then I'm going to make my entrance at that point. So you can see here, it's working back up into the range. It breaks out. It's going to break up bullish, but then immediately reclaims bearish, and then another massive bearish candle bringing us back down below our opening range break. Now, before I enter, a lot of other traders right here would have went in and it would have been okay, but I always wait for a fair value gap to present itself. So now you can see here, we waited until about 11:40 Eastern or 8:40 Pacific Standard Time. We've broken out below and we have a fair value gap presenting itself. right here is where I entered my short. As soon as that candle closed, I set 10 points right here and I set 20 points as my take profit, a 1 to 2 risk to reward. I'm risking $500 to make 1,000. We're into our trade at 11:40, right when that candle closes, and here's how it plays out. It's going down, we're going back up, nope, and boom, we're out. So we hit right here. We also would have hit again even if we were set a little bit lower, but right here we hit a perfect 1 to 2, and that was right at 12:05. So we were in this trade for about 25 minutes. Now, I waited, my patience paid off. It doesn't always pay off, but this is how I do it. I don't ever trade this right after the break. If it's a massive swing, I just don't do it because I've been burned. I then wait for the zone to reclaim or a fair value gap to present itself. You can see here it came down, retouched into the zone, broke above the zone, and then came back down underneath bearish. Our fair value gap presented itself. I went in right here on a short with my stop loss right above the midway point in case we do correct a little bit back, with a 1 to 2 risk to reward, and 25 minutes later we hit. Now, this is my morning New York session opening range strategy. It's what I've done for the last several weeks. It's what I did prior when I was day trading more full time. But this has always worked for me for the last few years that I've been doing this. Always made money doing it. I typically, when I trade this way, have about a 60% win rate, but I don't take everything. And a lot of times I only trade 2 days a week, sometimes three, because a trade doesn't always present itself every day. And I very specifically wait. I don't trade the massive candle right after the first 5 minute candle because I've been burned. And then I wait for a fair value gap, bullish or bearish, to present itself. If it doesn't present itself, I just simply don't trade that day, and that sucks. But the one I just showed you and how I did that trade, I'm trade copying 3 accounts. So by doing that, I didn't just make $1,000 on a 1 to 2 risk to reward. I made $3,000 across 3 accounts that are copy trading each other in Apex Trading. So that wasn't just one account, that was 3 accounts, and I'm managing all of them with that risk at one time. So before I go in, I make sure I'm very detailed and I'm very confident. Here's the other thing I do. The minute I go into a trade, I close the browser. And it's because I am not good at sitting there watching it. I'll see, oh, I'm up 750, let's just cash it. I need to trust my strategy, and the only way I trust my strategy, I find my entry point, I'm confident in what I'm doing, I close my browser and I walk away, and I come back later. And the anxiety and the anticipation kills me. Some days I win, some days I lose, but I have to trust my process. I have to trust my strategy. And if I don't, I either talk myself into gambling or talk myself out of making money, and I stop it early. So if I could give you one piece of advice with trading, whether you're using Quant Crawler, whether you're using just an opening range break strategy, if you have a strategy down, you have to have one that you trust. If you trust your strategy, set it and forget it like a crock pot, baby. Set it and walk away or leave it alone. You win or you lose, be confident in what you have, and call it a day.